Our conditions remaining bearish, currently at a majority bearish of 14 now on S&P 500, and breaking down through some support areas. Now we sliced right through that demand block, and has now become a supply block. The red areas overhead supply, meaning some resistance areas. We're seeing S&P 500 now, and that trend continuing to accelerate a little bit deeper. We're seeing on the 1 hour time frame majority bearish at 14. Also seeing that trend expanding out versus a compressed trend. We're expanded to the downside. We're definitely oversold in the shorter term. We could see a bounce back into this supply block here, potentially back up to that 5,800 on S&P 500. But we're watching for everything now to be resistance on S&P 500. That 5,690 level could retest that 5550. Probably did very close to that yesterday, and we'll see if we get any reprieve from the selling today. Any kind of a pushback up. Futures sitting up slightly. You can see from that other chart it's pulled back a little bit, and again, this is now a supply area. Let's push that over. We'll move that into red on futures as well. Let's jump over and take a look at the breadth. We're seeing that at majority bearish at 1441.5. That overall trend still, that overall downtrend still in place for breadth on the market. We saw a big spike in volatility yesterday, up to 27 on the VIX. Seeing that trend expanded here as well on the 1 hour time frame and the daily time frame. You can see back where it has been at before on a couple of these pretty large spikes, and pretty overbought for volatility, oversold for momentum, and breadth still in a downward slope right here. We'll see what the market gives us today. SHY short into the yield curve, seeing that compressed state now and starting to expand that trend. I've moved this price trend out just a little bit more so we can see a little bit more data and kind of see where maybe some longer term trends are a little bit further back. We're seeing that price pattern here as bonds are moving up, retracing that inside of this area and now working its way back through that. This is SHY short end of the yield curve. We're seeing TLT, a similar type price pattern, not quite as strong, and could be coming, running into some resistance here in the shorter term. Those correspond to the 2-year yield. We're seeing that majority bearish to the downside. Also seeing when we go out a little bit further, you can see that that fib snap tool is snapping to this trend direction. When it snaps this direction here, that is snapping the bearish trend on the time frame, and then anything this direction is counter trend. So we ran back up into this corrective zone of this downtrend, and it was repelled by that area also. So overall, giving us that visual as well that we're in a downtrend still on rates overall for the 2-year, which ultimately is a good thing. Though one of the issues now is just dealing with potential recession, or that we're in recession. And I believe we have some inflation numbers coming out tomorrow. We'll see what that how the market reacts to that. U.S. 10-year also seeing majority bearish at 14, working on this retracement. This one is snapping that bullish trend with a little bit of a pullback right here, but solidly in the downtrend here on the 10-year. Dow Jones Industrial Average pulling back into some demand areas right here, that 50% retracement of this current trend. Similarly, we're seeing this trend on the 1 hour time frame really extended, and could see a bounce here from those levels, at least over the next few days. And we're entering an area where we could also run into some longer term move on the market to the upside. But again, we're just paying attention to what's in front of us right now. We're not necessarily trying to anticipate where it's going. We're just looking where we at currently in the trend, and that triple Q is also running into a pretty deep retracement, 50% retracement on that time frame. If we go all the way back out to some of those most recent lows, this retracement doesn't look too bad. Okay, but the fact that we're really extended into this trend from here to here on most of these markets, not surprising to see some volatility at these levels. IWM, which is the Russell 2000, also pulling back inside of the deeper end of that corrective zone, pushing that 618 area, and also inside of that demand block. USO ETF for oil still showing a lot of weakness right here, just a huge amount of volatility in oil. really nothing of interest right there. Gold also, gold you're seeing some, we've talked about this expanded range, upper end of the trend, could see some retracement here, seeing a little bit of weakness here in the shorter term on gold also. And let's jump over and take a look at that silver chart, SLV, similar type price pattern, in momentum, still working towards that overall uptrend or in that overall uptrend, just having a little consolidation right here. A couple stocks to consider today. Nice looking pattern here on MWA, nice confirmation bar, big volume, back up into momentum. And another one that is looking compelling here is AEP, nice confirmation bar also. Let's let that fib snap to a grab on. There it goes. Add anything above that 236 location is in momentum. This entire range up here is that momentum zone, and anything deeper than that, these become our corrective or counter trend zones. So got a little bit of a bounce in that location, now back into momentum, increasing volume on AEP. That'll do it for today's update. Everyone have a fantastic day today.